let's have a look at energy. So I've got the chart I've got oil and uranium on this chart here, and I've kind of superimposed them on the same chart. So in terms of price, we've got uranium on the right side, and then we've got oil on the. So uranium's the orange chart with the prices on the right. Oil is the green line with the prices of USO on the left. So we've seen this kind of parabolic rise from the summer, where both these things rallied pretty damn hard. And now you've seen a very steep drop. So we've seen uranium come from sort of 28 back down to 25. So that's a very fast, above 10, sort of 10% or more sell-off. And we've seen oil go from about 83 on USO down to 75 here. So same sort. So basically 10% sell-off in both these names. Now, I've done some Fibonacci confluence grids to see where the supports come in. So in uranium, we've got support around where we are now. We've got some more support at these levels, 23.5, 24. This is on the URA ETF. And then when we look at oil, the USO ETF, we've got some supports down at kind of 71 and then again down at sort of 68. Okay, so we've still got some pretty big supports if this thing wants to keep selling off that could hold and the uptrend still be intact. But right now, you know, that uptrend was so damn steep that actually we are well and truly intact still, I would say, on both of these. So if you missed it, if you missed the trend in these things, the 30% plus rallies, and now we just had a 10% correction, you might be perking up your ears to kind of see, do I want to get involved here? So now let's look at what's going on the vol side. So as we've gone up from the kind of mid 60s, we did start to see oil vol going down, but then as we accelerated through 75, we saw the vol go higher. And now as we've crashed back down to 75, we've seen the vol go up even more. So you can see from about a month or two ago, the market's rallied and pulled back some, but the vol has just kept trading higher. Okay, that's in oil. Similar story in uranium, right? We're in uranium, rally, 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 nothing going on. You break through 25, you accelerate, the vol spikes, and now we sold off and the vol's still higher. Okay, so you've got the URA curve shifting up into the kind of high 40s. You've got the USO curve shifting into the mid 30s. Massive moves in vol, about 10 points in oil and about 20 points in uranium. Okay, and if you compare these downside vols now, where they're currently pricing, to where they were a month ago, massive premium basically. Okay, so that's what's gone on. The market's rallied and retraced, but the vol, the implied vol on these downside puts is a lot higher than it was before we started the move in the summer. Okay, so what do I do with that? That says to me, if you haven't got into these uptrends and you want to, selling out of the money puts naked as in a cash covered way is a fantastic way to bring in some premium and get yourself back into these markets. And kind of, if you're happy to allocate capital at lower levels in these markets, because they could easily correct some more, you know, generally when you get this sort of move, you kind of want to have a little bounce and then probably a retest with less velocity, and that will be the ultimate actual bottom of the correction. So these things could go lower, but you've got quite a lot of wiggle room to sell downside puts because the vol's so elevated.